Roots has released its latest quarterly results, and same-store sales were up about 7.5%. You can see the stock is up around 3% right now. We're joined by Meghan Roach, CEO of Roots. It's great to see you.
Thank you for having me.
So you have a pretty small business in the States in terms of actual footprint there.
Yes, that's correct.
It's 85% Canada and then a presence in Asia.
That's correct, yes. So we have a very small presence in the U.S. We have 2 stores, an e-commerce business, but our business is predominantly Canadian today. We also have 119 stores across Taiwan, which is managed by a partner for us.
119?
Exactly. Pretty big presence in Taiwan, and we also have a business in Asia where we're traded on Tmall.
Where you're
We sell on Tmall, which is the largest online platform in Asia and China specifically.
Oh, I see. So more than 100 stores in Taiwan?
Yes, yes.
You must be a significant clothing retailer in that country.
Yeah, we have significant share in Taiwan. We've been there for 26 years, and the brand really resonates with the consumer.
What are the Taiwanese like about Roots?
I think probably the same thing Canadians like about Roots. I think the fact that we have great quality clothing, super comfortable, great fashion trends. So really it's resonated across a number of different product categories for us.
What about the mainland China, if I can call it that? I don't
Yeah.
know if I should. Just China. Let's just call it that. I don't want to get in the middle of anything.
Yeah, absolutely. So our business in Tmall, which is, again, one of the largest online platforms in China, we see double-digit growth there year over year. So great business there, growing business, and a lot of opportunity for expansion.
So you class sales over the internet, you would call those direct-to-consumer?
Direct-to-consumer includes both our retail stores and our internet sales. So when we talk about 7.5% comp sales growth in direct-to-consumer, that includes both our retail stores and online.
And could you give us a rough idea of how much of your sales are via e-commerce now?
We don't specifically disclose it, but it has been a growing penetration. And from our perspective, we look at our business from an omni-channel perspective. So when you think about it, so I mentioned 7.5% comparable sales growth on retail and e-commerce. We also had a 270 basis points increase in gross margin. Our EBITDA was up 9% this quarter, so a really solid quarter. And that's coming from the fact that we are increasingly an omni-channel business. So if you go online, you can buy products online, in store, you can ship to store. We use all of our stores as fulfillment hubs. So if you buy something today from our online channel, the chances it comes from stores are pretty high. About 50% of our items are actually shipped from our stores.
But people do get stuff delivered to their house as
Absolutely.
well, obviously.
Absolutely, yeah.
What do you do about customers who keep sending stuff back? Is that a pain in the neck? I
mean, we have really low returns, yeah.
Sorry.
So our business is really low. We have really low returns relative to the industry, and a lot of our customers bring items back to our stores. So having 108 stores across the country, one of the reasons we're such a great Canadian brand means that people buy online and then they bring it back into the store environment. Because
endless returns are a pain in the neck, I think, in terms of logistics.
They can be. Again, luckily for us as a brand, we don't really have a significant amount of returns. And I think it's because the Canadian consumer knows us really well. They know what to expect from our brand. And again, they return a lot of things to our stores. So we can sell something else to them when they come back into the store environment.
Yeah, you like other retailers, you like to have them in there because impulse is an important part of the business.
Yeah, and I think what's interesting, if you think about our fourth quarter, when we saw our customers coming in fourth quarter, to your point in impulse, our activewear collection has really been growing as a percentage of sales, and this quarter was actually up about 40% year over year. And we think part of that is because our customers came into the stores in the fourth quarter because we had great holiday advertising, great products. They bought activewear, they bought things like our Cloud collection, our One collection, and so we saw really good growth in the fourth quarter overall because I think part of it is driving traffic in the stores and then people seeing things they like and buying that impulse purchase item.
I'm just looking at a chart for your stock. I'm not sure if we can put up a 10-year chart. As you know, in 2018, you got up there above $13. Now, the shares are closer to only $2 now. They just haven't done much in recent years. Why is that? Well,
so I came into the business about 5 years ago. So if you want to put a 5-year chart up, I think you'll probably see a different trajectory. We're up about 230% on a 5-year basis. So really, I think what you can see is the business
We're not showing that, but sorry to interrupt.
Yeah,
Meghan,
absolutely.
But certainly it has doubled in the past 5 years. And these percents can be very volatile depending where you start.
Absolutely.
Sorry, go on. What were you saying?
So significant growth over a 5-year basis. And a lot of it's coming from the fact that we've been changing the business. So we massively reduced our debt. If you went to 2019, we had over 90 million in debt. Today we're sitting at 7.5 million. So really significant reductions. Our gross margins are up substantially from that period. We've seen a significant diversification of our product offering. As I mentioned, we've strengthened our business internationally. internationally. So our online business in Asia, as I mentioned, growing really well. So really across the board, I think a lot of the business growth is coming from all the changes that we've been making. And I think we're seeing that even in the first quarter this year so far. We're about 8 weeks into our first quarter. We have low double-digit comps in the first quarter. So continuing to see some really good momentum from a business perspective.
Right. So that's for the previous quarter was 7.5% comps.
Exactly.
And what did you say you are in?
Low double digits in the first 8 weeks of Q1.
So above 10% anyway.
Yes.
Not too bad.
Yes.
And sorry, what changes broadly have you made to the product mix?
So a lot of things. So I mentioned activewear before, that continuing to grow as a percentage of our overall sales. So activewear, as I mentioned in the fourth quarter, was up of over 40% year over year. And that's kind of a continuous growth we've seen. We've seen an expansion into organic. So you look at our business today, a significant portion, over 90% of our products are made with sustainable materials. We've introduced more items with minimal logos. So our Cloud Fleece, our One collection, I know that's a key thing that you've focused on previously.
No, I said some people don't like a big logo and some people do.
Absolutely.
Anyway, carry on. Sorry.
So that's definitely becoming an increasing portion of our sales, and people love that. And then even our main Cooper Fleece collection, things like different silhouettes, different types of bottoms of pants, etc. That's been doing well. And then our lifestyle collection has been growing too. So we're seeing a lot of changes across the board in terms of what we offer, the types of materials we offer. And I think a lot of people, it's resonating with a lot of people.
And you still get a lot of the purses and belts made right in Canada?
Yes, all of our leather materials are made in Toronto. We have a leather manufacturing facility here. And so we get materials from Italy or France, and then we make them all in Canada. So it's really nice to see that. You have this craftsmanship in Toronto. It's only about 25 minutes from the studio, and you can today buy something in our stores that has that great Canadian manufacturing capability.
And just to reiterate, as far as you can see, the Trump tariffs are a non-issue for you guys?
Yeah, so from a U.S. perspective, because we have limited exposure, we don't see that. So coming into Canada from other countries of sourcing, that's not obviously impacting us today. And we longer term are looking at what's happening with the U.S. dollar. We're thinking about Canadian consumer discretionary spending and confidence. But what I'm really hopeful is that people think about buying and investing behind Canadian brands. And so today, looking at a brand like Roots, I'm hopeful the consumer will continue to spend their dollars with us.
Meghan, thanks very much.
Thank you.
Meghan Roach, CEO of Roots.